On Wall Street, true anomalies are rare. Prices usually move for clear reasons like earnings, guidance, regulatory decisions, or major strategic news. Investors rely on that predictability. They expect it, which is why what happened to Coincheck Group NV in early December 2025 was more than unusual. It violated the logic that normally governs public markets. A stock stuck near 3 suddenly exploded to almost 8 in a single session. Daily volume that normally hovered in the tens of thousands surged into the millions. There was no new filing, no new forecast, no sudden regulatory break, nothing that would justify such a violent re-rating. In a market that demands a catalyst for even moderate moves, this eruption felt less like enthusiasm and more like a detonation. Coincheck Group NV sits at the top of a Japanese crypto ecosystem built through a decade of volatility and survival. Its operating exchange, Coincheck, was founded in 2012 and stepped fully into crypto trading in 2014. The company then lived through one of the largest crypto thefts in history in early 2018 when roughly $500 million in NEM was stolen. In normal circumstances, an exchange facing a $500 million loss disappears. Users flee, regulators intervene, and the platform collapses. But Coincheck survived because Monex Group, a major Japanese brokerage, stepped in and acquired it. That kind of survival through acquisition instead of shutdown already hinted at structural value deeper than a single catastrophic event. By 2022, Coincheck had built a Dutch holding structure. On December 11, 2024, it listed on NASDAQ through a merger with Thunderbridge Capital Partners 4. Normally, after a de-SPAC listing, insider ownership reduces over time, causing the share price to reflect broader market sentiment rather than the decisions of one dominant owner. But Monex retained roughly 80% of all shares. Typically, such concentrated ownership results in lower volatility because fewer shares circulate. Yet throughout most of 2025, CNCK behaved like a thinly supported small cap instead of a tightly held exchange operator. The financials added more confusion. On February 12, 2025, Coincheck reported quarterly revenue above 120 billion yen and total customer assets exceeding 1,090 billion yen. Adjusted EBITDA showed strong expansion. In a typical growth exchange model, that level of revenue momentum and asset accumulation would stabilize investor confidence even if net income remained negative. Yet, CNCK's net loss widened due to listing costs and infrastructure investment. Under normal valuation logic, this combination signals growth, but the share price continued to erode toward the low 3s. Then the company announced on August 5, 2025, a partnership